Have you ever wondered why, as a business owner, when you get to negotiate a deal with a client or an engagement with a client, then when it gets to the point of payment, the client pays you an amount that is sometimes a little bit lower than what you initially negotiated, then that is what is called withholding taxes. So if you're a business owner operating in Nigeria and want to know how withholding taxes works for your business, then this video is for you. So, most of the time people get to ask, okay, what is withholding taxes and how is it significant to my business and then to the tax landscape when it comes to my business or my industry. So this is why I'm making this video for you, and if you follow me to the end of this video, I'm going to be exposing you to how you're going to be utilizing withholding tax to reduce your company income tax, or using withholding tax to ensure that you stay compliant with other taxes and avoid huge penalties. So withholding tax is basically a transaction-based tax that is done depending on the transaction you engage in. For instance, you can be a real estate company, but then you get to engage in transactions like development of your site, purchase of materials, then also consultancy for architects, and then consultancy for several other people that has to do with developing a construction site. Then when you for instance want to purchase materials that has to do with cement, rods, and of course several other materials that are used in your development contract, you are going to pay a certain amount as withholding taxes. And then when it comes to withholding taxes is a monthly tax, and then the rate of withholding tax is dependent on the engagement you're going to. Let's take for instance, withholding taxes ranges from 2% to 2.5% to 5% to 10% to 15% and even up to 20%, depending on the particular transaction that entails in that engagement you have with your client or with the organization or whoever you're getting to work with. Let's take for instance, in a scenario of a real estate company, as I said earlier, you're going to purchase cement and purchase materials that will help in your development project. Withholding tax is charged at 2%. Then let's take a situation where you get to engage in consultancy. For instance, you hire the services of an architect to be able to provide architectural services to you when it comes to your development of your construction sites as a real estate developer. You're going to withhold 5%. Then if you as an individual or you as the company is offering that services to a client, the client withholds 5% from your fee. For instance, when a client wants to pay you 1 million naira for your services, architectural services, marketing services, and other consultancy services, the client withholds 5% and pays you 950,000 naira. And that doesn't stop there. Most of the businesses operating in Nigeria just feel, oh, this is withholding tax and that is all that it is for it. But then that is not all, and this is why I'm making this video. So if you have watched up to this point, you can subscribe, like, and turn on the notification button so that when we get to drop powerful, insightful content when it comes to tax and finance for a business like this, you will be the first to access them. So let's come again. When it comes to withholding taxes, withholding taxes are used to offset your company income tax. When I say offset, let's take for instance, you have done a 1 full year calendar for your company, that's 12 months calendar, and you are supposed to prepare your financial statement, audited financial statement by your auditor, and file to the tax office in order to pay your tax for that year. Then along the line, you had several withholding taxes where people withhold taxes from you at 5%. Let's take for instance a situation where I said you offer services to a client, the client is going to pay 1 million, but the client withholds 5% and pays you 950,000 naira. So in an ideal situation, that client is supposed to take your tax identification number and file that 5%, which is 50,000 naira, to the Federal Inland Revenue Service on your behalf with your team, if you are a limited liability company. But then if you offer that service as an individual, the client is supposed to file to the State Inland Revenue Service where you reside still on your behalf. So you are looking at the context where you are a limited liability company. So let's take for instance, the client files that withholding tax of 5%, which is 50,000 naira, to the Federal Inland Revenue Service on your company's behalf. Then at the end of the year, you have filed your audited account, you have raised assessments, tax computation has been done for you, and you are supposed to pay for instance 100,000 naira in taxes. So what happens in this case? Because that withholding taxes have been filed on your behalf, it will show in your online tax account as a tax credit to your company. So when it shows as a tax credit to your company, you have the right to use that tax credit, which is 50,000 naira from that previous transaction, assuming the whole year you had only just transaction, to offset, to reduce. By offset I mean reduce that 100,000 naira. So if you're supposed to pay 100,000 naira in taxes and then you have a 50,000 naira tax credit, 100,000 minus that 50,000, then you are going to be paying just 50,000 naira. But then this is the mistake most companies does. You get to see that a lot of withholding taxes are applied on your invoices, deducted from the fee you have charged to offer services to several people or companies, but then you don't see anything and then you are losing money. That money is still yours. What you're supposed to do is to follow up on those clients, follow up on those people you are providing services for, to file those particular deductions, withholding tax deductions, to the Federal Inland Revenue Service on your behalf with your tax identification number. So they appear as tax credits in your company's name in the Federal Inland Revenue Service, so that when you are going to pay taxes, you can use them as a credit to reduce your taxes. So withholding taxes is not just a new different kind of taxes. It's just a part of company income taxes, because it's used at the end of the day to reduce your company income taxes. So this is the lesson I want you to learn today on this session, because many companies out there don't get to follow up so that this withholding tax can be filed on their behalf. And then if you are a company that have been deducting withholding tax from people and you fail to file, then that is a big problem for you, because by the time the tax authority comes for you, you are going to pay dearly for holding people's money without filing. You know, the government is very brutal about individuals or companies owing them. Because for instance, if you withhold that money and you don't pay, you are in one way or the other owing the government, and when they come, huge penalties are going to apply on it. So if you are in that situation or you are currently doing that, I advise you as a professional today to ensure that you remit those withholding taxes you have been collecting from people and based on their transaction and invoices. And then if you have been in a situation where withholding taxes have been collected on your behalf and then they have not filed, you ensure that you reach out to those companies either by email, phone calls, or continuous follow-up for them to file on your behalf, because that money serves as your tax credits to withhold or your tax credit to reduce your company income taxes. So thank you so much for watching this video. See you in the next one. Okay.